Man, the economy has been taking a beating. I guess we can start off in kind of the macro lens. I know there's a little bit of a rebound recently, but man, this chart here is just shocking. The first term in Trump in blue there for the first year of his first term, I believe, and then the first few months of his second term, and that's the S&P 500 just tanking. And so I think the Trump administration is feeling the pain a little bit, even though they're still talking like it's all going according to plan. Short-term pain for long-term gain. What else did they say? They say that it's detox. They're detoxing the overspending. And I got to give them kudos too for recognizing that we're on an unsustainable path, because as gold bugs and Bitcoiners have been talking about for a long time. But now they're getting pressured. Are we going to hit a recession? What does this mean for markets, for Bitcoin? A lot of people I hear worried about, a bear market. Oh, we've entered a bear market. We're screwed, right? There's just a lot to talk about. So I don't know who wants to dive in first. Maybe Steven, I know you got some thoughts on that.
For sure. So actually I'd even push back on the initial thing you said, the economy's taken a beating. Actually, the economy is doing great. The stock market has taken a beating.
Yes.
And these are like two very different concepts, because all the economic data we've had come out is like really pretty good. Unemployment's slightly down, inflation's down, GDP's a little bit lower, but there's a lot of noise in that. That really dismal negative print was total bullshit caused by a huge amount of imports throwing off the calculation. So the economy is actually pretty fine. And that's one thing the Trump administration keeps actually landing as a talking point, is actually there's a difference between the business on the ground reality and the stock market. But the stock market has been like the worst performance in the first 2 months of a new term that I think we've ever seen. It really has been. It's not that a 10% drawdown is so unheard of, that it's the speed. And it makes sense that it's happening. I've been saying this for a while. It's because you have an administration, and you can keep it this simple. Trump, Bessent, and Powell all want the stock market to go down. So it is. It's that simple. The stock market is used to administrations propping it up and putting a lot of money, doing a lot of accommodating positions. And so this is a brave new world where, for different reasons, both the executive, the treasury, and the central bank want stocks lower. And so lower stocks is what we've got. And that's what's been driving Bitcoin performance. The good news here is it has nothing to do with the realities of Bitcoin. It has nothing to do with kind of anything that really happened to Bitcoin. I actually think Bitcoin's in a really strong place on a few fronts. Now, what hasn't been going so well is at least the kind of verbal targeting of the strategy of the Trump administration is saying we want to get the 10-year down. We want to see the 10-year come lower. It's come down a little bit, but it's not, compared to how much we've gone down on the S&P. I don't think the 10-year has come down enough at all. So you've seen maybe 40 basis points of a lower yield from 470 to 430. I would have wanted to see a lot more than that for the amount of pain we took in asset markets. So I think that's a problem. And I think one reason that happened is, at least on some level of the strategy, it's saying, hey, if people are fleeing stocks, they'll buy bonds. Ironically, what happened is they bought international equities. And so I don't know what everybody's thinking, but it's hard to see that as been like the intended outcome, where people sold US assets and actually bought European and Chinese equities. Those markets have been doing great. So if you were a European or a Chinese equities investor, you had a good month. You had a dismal 5 years, but you had a good month. We're just navigating. So the one kind of real data point that I think matters is in kind of the landscape of this correction in the stock market. The administration basically made no comments about it. They didn't really address it. The only thing they said is, we're not really watching the stock market, which of course made stocks fall further. In the last 72 hours, they've released 20 statements. What that tells me, we're in the zone where it's starting to be painful for them. It's painful for people. And I think people are losing a little bit of faith in some parts of this strategy. Is this really going to work? How much pain are we talking about? Do the benefits, is it going to be worth it? So I think this is something they're going to increasingly have to navigate. My personal prediction, I think they can handle maybe another 5% down, and that's about it.
Well, what do you think? What do you think they do if there's another 5% down? What is their? I think I heard you say in a video that there is no Trump put, but there is. What was it? There is a Trump call, right?
Yeah. So this is something Bessent said. So the Secretary of the Treasury, he was asked if there's a Trump put. A Trump put is saying, is there a level we're going to get to where Trump's going to support the market. And Besant basically said no, but there is a Trump
And then they
call.
dump further.
Yeah, and then it dumped further. And so it's saying there's upside. I read that as they are going to come spend and do stimulus and do these things. Like, it is going to happen. They will. That will be, stocks will be happy then. It just isn't yet. So the question is, once we get to that point where they really can't take the pain anymore, there's many things, right? So obviously a simple one is you back off the tariff strategy, you back off some of these things that were put on. Does he want to do that? Is he willing to do that? We'll find out. If you don't want to back off the tariff strategy, something he could do is he could do corporate tax cuts, right? So let's say you have a 10% global tariff that makes, let's say it feeds into the inputs. It's not a straight 10%, but let's say call that a 10% drag on stocks. If you then cut corporate taxes by 10%, you can offset that, not in terms of prices in the real economy, but in terms of asset investors. So tax cuts, he can deregulate, they can spend money. So they'll have to figure out which of these policies, or the Fed cuts rates. But I think like we've got another 5% and you start seeing policy adjustments.
All the little levers that they can pull, right?
Correct.
To change the economy. All right, John, what are your thoughts on the broader economic kind of outlook?
Yeah, so I definitely want to offer some thoughts, but first, Rob in the chat, I think, has a fair comment. So, Stephen, he was questioning, you saying the economy is fine. I think I can tie the pieces together here. Let me know, Stephen, if you agree with this. But I think, Stephen, you were more so saying that the 10% decline in US stocks, the magnitude and exactly when that happened, we're not saying that signals the economy going down, not 10% exactly, but it doesn't signal a significant worsening in the economy in as like a one-to-one type of thing. I don't think you're making the case that the economy is this great, healthy, balanced, sustainable thing. There's probably plenty of things that you would point out that the US economy needs to fix over the long term. Do you want to just address exactly what you were getting at when you're saying the economy's okay?
Yeah, definitely agree with the part you framed of just, this isn't like an economic deterioration that drove down stocks. So it's not like GDP fell 5% and so stocks are down 10%, or we expect corporate earnings to be down 20% next quarter or something like that. But I get the question, and I think I think it's hard to talk about, because if you say the economy's fine, people will be like, hey, like we've got these issues. We've got the kind of asset owning class has done very well. The labor class has not done well. Is that a fine economy? That's not what I'm saying so much. But I think in terms of, there are of course problems, but I think in terms of, we're talking about markets, basically growth, inflation, unemployment. Those are the big three. And I am saying, I think those big three are pretty fine right now. It's not like the best economy we've ever been in, but we have had way worse ones throughout the 70s and 80s and 90s. Inflation is really relatively low right now. Even the CPI is not too bad. If you have trueflation, which is like a real time, they're saying it's like 1.3%. So it really has come down. And growth,
except for in eggs.
Yeah, except for an egg. Obviously,
yeah, we're going to need to start diversifying. We're going to have to contact peas, got chickens. We got to diversify into eggs from Bitcoin, because that's crazy. 307% in 5 years.
100%. I think like the top line number is relatively normative. GDP, it's not like raging growth anymore, but it's okay. And unemployment is okay. So in that sense, those big three, it's fine.
I totally agree that when you said it's tricky to talk about, I think any words like economy, even inflation, it's one of those things, the old joke, it's like you ask 10 different people what the economy means, you'll get 11 different answers. So I think it's just hard to really say, is the economy good? You need to like get it down, drill down deeper. So yeah, there can definitely be some confusion there, but hopefully that helped elaborate a little bit. I'll just offer a quick thought on the macro stuff, which is, I think the $1 million question is, how much pain in magnitude and duration is the Trump administration willing to endure here to reorient the economy, get their policies in place, get the 10-year down, all the things that they've talked about. I don't think anyone can claim that things are going to turn on a certain day unless you're Josh Mandel. Apparently you have that skill. I'm glad I called him Josh. I always want to say Howie. because the Howie Mandel, the comedian. But Josh, man, I think we'll get to this later in the show. If you don't know what we're talking about, we'll explain in a little bit. So because I'm not going to call a day when the Trump administration is going to say, hey, this equity market pain is getting a little too big for us, I think you need to talk in terms of ranges. And maybe some people might say, hey, you're giving too big of a range here, but I'll just start with this we can take it from here. I think it's somewhere between 3 to 12 months. The worst case scenario would be that the Trump administration is willing to have 12 months of equity market weakness that takes us into Q1 of 2026. And that, again, this is a worst case scenario. It's not a base case scenario. But they say, hey, look, we just won. We have all three branches of the federal government. We're going to reorient the economy, get our policies in place. We're doing this long-term switch. Hasn't been done in generations, and you guys just have to deal with equity market weakness. I think really a year is like the max that they could do that for.
Because midterms too, right?
Yeah, once you get into like mid 2026 and you're approaching midterms, are you really going to risk losing the House and the Senate because most people are just looking at their pension, 401k, their IRA, their brokerage account, and they're all saying, hey, what the heck is happening here? They're not just totally unconstrained in this. I'm trying to give the worst case scenario. That would be for broad risk assets, though. There's still something worth saying for Bitcoin here, which is, and we'll also get into this on the show, even if equity markets are soft for another full 12 months, that's my bear case, that doesn't mean Bitcoin's going to be flat, because there could easily be an announcement of the US government. They've already been tasked, Besson and Lutnick, to buy more Bitcoin budget neutral. If that announcement comes and Bitcoin could easily rocket up 10K, 20K, something like that, while the equity markets are flat. And it doesn't just have to be the US, right? It could be some other country that announces, hey, we're now adopting Bitcoin as well. Given that as a backdrop, to be perfectly honest, I would feel better holding Bitcoin than I would general US stocks at this point in time.
Yeah.
Couple points here. So on Trump, how long can he handle the pain? What do the tariffs do? How does this all come together? I thought Lutnick's interview on one of the mainstream medias was pretty interesting, where he mentioned that the goal of 150K zero taxes. So that little piece, what else did he say about that? Yeah, it forces countries to pay a membership fee to sell in America. I think that's an interesting frame. But if he does that, okay, let's put it all together. Tariffs are inflationary. Of course, you raise the cost of importing goods. If you reduce corporate taxes, asset NGU, okay, great. Asset holders are covered. And if you reduce Main Street taxes, great. Now you offset all the increased prices. So you can essentially just shift the burden around a little bit, and individuals and asset holders both end up being okay, and the rest of the world pays more. I think that's I don't know if they can pull it off, but I see the picture. And if the picture works out, I'm in.
They're sure going to try. We'll see what happens.